Just kind of moving on, we talked a lot about bankruptcy and sticking with the bad news theme a little bit here. Let's talk about some dividend cuts.
Yeah, people are probably thinking, scratching their heads, oil prices are up. Why such dour news about the energy space today?
So earlier this week, National Oilwell Varco, a company both Taylor and I are big fans of.
Yeah, we've both been to HQ down there in Houston.
Talked to the CEO of the company went at various times, and I think we're both personally invested in the company. At least
I am not, but it's definitely a company that I followed closely.
But they cut their dividend by 89%, I believe. It's down to 5 cents per quarter. One of the biggest reasons, CEO Clay Williams basically saying, we want to treat shareholders right, but with the market acting the way it is, we had to cut it. And something you just kind of hinted at for a quick second there is we're starting to see oil rise again.
Yeah,
all this good news is coming out. Like
above
production's starting to slide.
Yeah.
It's above $40, and everybody's optimistic again. So, in your opinion, why do you see this as if it's getting better, why now?
Well, I guess a dividend, we always say, is never a guarantee to be paid out. And with National Oilwell Varco, it's a company that is very heavily tied to offshore rigs, and so I think that's a little bit further out in terms of recovery. We're still seeing land rig declines. So until you start to see land activity pick back up, you're still a ways off from offshore activity. Not to say that this company has no exposure to onshore activity. So when that picks up, their revenue likely will as well. But I think it's a prudent move by a company that's been around, and they do have great diversification across the sector, but offshore is still a big portion of this business, and you continue to see rigs being cold stacked, put back at the docks, or being tried to be sold in auctions.
Or even cannibalized. You've seen a lot of companies doing that, where they're just basically taking rigs, either land or offshore, and being like, well, we're not going to use this thing for a while. Let's strip it down and use parts for it. So
that's my opinion. It's going to take some offshore activity to really get this company back. I don't think that it's going to take offshore activity to turn the stock around, but it's going to take offshore activity to get it back close to where it was a couple of years ago.
As much as somebody's personally invested in it, I'm not a fan of kind of losing the dividend check.
Absolutely not.
But
it's
at the same time, I do kind of have to golf clap them a little bit for deciding to do a dividend cut while the finances for the company still look good. If you look at the company's balance sheet, it still has a ton of cash. It's still, I believe, actually net cash positive in terms of their debt. Don't quote me on that one. I don't have the numbers.
They weren't getting a swirly from the energy market. They're getting bullied into it.
Exactly. So they're doing it as a more prudent move now to kind of be ready for when the market does turn, that they will have well-financed and capital ready and available to either make an acquisition or something like that.
Historically,
very
well,
routinely.
Yeah, and very well.
Yes.
When I talked to Pete Miller a couple of years ago, he talks about they just have this huge, whether or not it is an actual binder is up for discussion because he didn't show us, but he's like, we just have an entire wealth of, like an encyclopedia of our acquisitions that we can turn to make sure we're following these steps that we've actually either discovered don't work or that we have seen play out well over time consistently. So this is a company that has been very good at acquisitions, and you would love to see them with some spare cash at a pretty advantageous time.